have your inflation bomb blast for the morning. Wall Street just told you inflation is cooling, and by the time you finish this video, you'll understand exactly why that is the most dangerous headline that you're going to read all year. By the end of this video, you're going to understand exactly why the June CPI print that just hit your screen this morning is backward-looking data describing a world that no longer exists, and what that means for your portfolio between now and the Fed's next decision on July 29th. Now, here is what the Bureau of Labor Statistics just told us. The consumer price index for June fell 0.4% on a seasonally adjusted basis. That is the largest one-month drop since April of 2020. The year-over-year rate came in at just 3.5%. That's down from 4.2% in May. The mainstream press is going to call this relief. Surely they will call it progress. And technically, they are not wrong. A slowdown from 4.2 to 3.5 is a real number. And after 3 consecutive months of acceleration, March at 3.3, April 3.8, and May at 4.2, anyone watching that trend will feel their shoulders drop this morning. That is the surface story, the consensus read, the headline that the algos already priced. But here's the first crack, and the entire move was driven by one thing. You're not going to be surprised to learn that. Energy. The energy index fell 5.7% in June, with gasoline down 9.7% in a single month. Strip that out, and the rest of the CPI was essentially flat. Core CPI, which excludes food and energy, came in at 0% for the month, not down, not meaningfully up. 0. And year over year, core is still running at 2.6%. The inflation that the Fed actually has to fight, the sticky kind, didn't actually move. Now, look, I get it. A negative headline CPI is going to feel good. It does feel good. After everything that has happened with energy prices this year, people, we want to win. And maybe for one morning, they deserve that. But my job is to tell you what comes next. And what comes next is what nobody on television is probably talking about this morning. Now, we are about to get deeper right here. But before we do, if you like this type of content, please click like and don't forget to subscribe. It's important to be in the know. We're watching this stuff and this is how you do it. Okay, here's the shadow data that explains why this morning's headline is already obsolete. The gasoline prices that produced this beautiful June print, those prices existed because of a ceasefire. The U.S. and Iran signed a memorandum of understanding last month. The Strait of Hormuz briefly opened, tankers started moving, and oil prices fell back to pre-conflict levels. That ceasefire era relief is what you are seeing in this morning's CPI. The BLS measured gas prices in June. June was a different world, in case you didn't know. That world ended on July 8th. On July 8th, U.S. forces launched fresh airstrikes on Iran after an attack on a container ship in the Strait. Iran retaliated across the Gulf states. Tanker traffic through the Strait collapsed from 18 to 22 daily crossings to just 6 crossings in a single overnight period. And this morning, I just checked for you. I think 3 is the number that passed today. That's nowhere near the 80 or so that used to pass through the Gulf prior to this whole conflict. And oil prices have been surging ever since, as you probably have heard. As of right now, this morning, Brent crude is trading roughly $87 a barrel. That's up more than 4% today alone and extends a near 10% surge from yesterday. Trump announced on Monday that the U.S. will impose a 20% fee on all cargo transiting the Strait and reinstated a blockade of Iranian ports. The ceasefire that created this morning's CPI print is not just gone, it's really gone. What does that really mean, though? It means that the July CPI, the number the BLS will publish in August, is going to capture energy prices that look nothing like they did in June, the stuff we see in the rearview mirror at this stage. The same gasoline index that fell 9.7% in June is being repriced right now as we speak, this very morning, as oil trades near $87. That relief was real. The reversal is already happening. Now, here's the thing about CPI that nobody really explains. It's always a snapshot of the past. The BLS collected those June prices when the ceasefire was holding. By the time that data was processed and published today, the underlying reality had already changed big time. So when you watch the market celebrate this morning, understand what the market is celebrating. Pretty much what I would call a ghost. Now, Let's talk about the Fed because that is where this gets real for your money. The FOMC meets July 28th and 29th. That is 2 weeks from today. Fed Chair Kevin Warsh is literally testifying before Congress right now as I record this, as the CPI print is landing on everyone's desk. And the question on every senator's lips is the same question every investor should really be asking. What do you do with a soft headline number when the underlying inflation hasn't resolved and the energy prices that drove it are already spiking again? Warsh is on the record saying prices are too darn high. At Sintra last month, he said, "We're all in the price stability business." That is a hawk talking. Here is the critical detail. 9 of 18 FOMC members are already projecting at least one rate hike this year. The Fed funds rate is currently sitting at 3.5 to 3.75%. Markets are pricing a 34% probability of a hike at the July 29th meeting, though that has come down a little bit after the print this morning. Before this morning, that number was probably going lower on the back of soft headline, But Warsh and anyone around him knows what every serious analyst knows. The June CPI is a backward snapshot. The energy prices that'll go into July's number are running hot right now as we speak, and they haven't shown up on your screen or on the mainstream media yet. And core is still above target. Shelter, which is more than a third of the entire CPI basket, came in at 3.3% year over year this morning. It hasn't broken. It rose only 0.1% for the month, and that's the smallest monthly increase since January 2021. That is a pretty good thing, and we should be happy about that. But that is still a positive in a basket that has been grinding higher all year. Now, here's your real positioning framework for now. The market this morning will likely rally on the headline. Equities will get a bid, although we had a couple of earnings out this morning that might be playing a bit with the indexes at the open. Rate hike odds will certainly tick down briefly. In fact, they have. I just looked at them before I recorded this. I noticed that the July meeting odds ticked down considerably. However, the September meeting odds did not change meaningfully at all, which is very interesting. And that reaction is technically rational for the next 20 minutes or so, but investors with a multi-week horizon need to understand what they are actually buying into. They're buying relief priced in June gas numbers in a world where Brent is at $87 and Trump just put a 20% toll on every tanker transiting the world's most important energy choke point. The July CPI will be measured on prices that are being set today as we speak in the real world, away from these screens. And today does not look like June. What should you watch? Well, clearly you should watch the Strait of Hormuz, not the BLS website. Watch tanker traffic data like I do here. Remember, three tankers transited today. Just a week or two ago, it was over 20. Watch whether Brent holds above $85 or pulls back on diplomatic signals. Watch Warsh's testimony today and tomorrow. He's going to be on Capitol Hill, specifically whether he says anything that gives the July 29th meeting a directional lean. And watch core CPI, not the headline. The headline told you what June felt like. Core will tell you where this is actually going to go. So your truth bomb for this morning is this. The June CPI print shows you what happened when the Hormuz ceasefire held, but the ceasefire is already over. And the July data will be measured on oil prices that are surging to $87 this morning, which means the market is celebrating a snapshot of a world that no longer exists. Join me every day for Wall Street Truth Bombs, where I drop them right here before the market figures them out.